Binance and KuCoin re-enter India post-securing regulatory approval. Binance and KuCoin, previously banned crypto exchanges, got approval from India's anti-money laundering watchdog. KuCoin is operational after paying a fine, while Binance awaits their penalty decision. The Indian crypto market is booming, projected to reach $343.5 million in 2024, with stricter regulations being implemented. If you're new to our channel, then subscribe and stay connected with us by like, comment, and share this video. In a groundbreaking move, Binance and its rival KuCoin have grabbed the spotlight as the first offshore cryptocurrency entities to get the nod from India's anti-money laundering watchdog. This news comes after both platforms faced a ban last year for operating without authorization. But what does this mean for the future of crypto in India? Will Binance follow suit and be back in action soon? Read on to find out the latest developments and what this could signal for the booming Indian crypto market. Overcoming legal hurdles. KuCoin has already paid a fine of $41,000 and resumed its services. Meanwhile, Binance's operations remain paused as they await the conclusion of their compliance proceedings, where the final penalty will be determined. Last year ended on a challenging note for these platforms, as they were among over 9 offshore entities banned from operating in India. However, not all platforms have sailed smoothly. While Kraken, Gemini, and Gate.io have started negotiation processes, OKX and Bitstamp are planning their exit from India. Resilient growth. Despite regulatory challenges, India's cryptocurrency market has shown remarkable growth. Valued at $73.8 million in 2021, projections suggest it will nearly double by 2025, reaching $123.2 million, with estimations soaring to $241.1 million by 2030. This growth is driven by a growing community of crypto traders supported by a robust compound annual growth rate of 54.11% from 2024 to 2032, with anticipated market figures surging to $343.5 million in 2024 alone. The expansion of crypto in India and the proactive stance of the government towards refining crypto regulations are key factors driving this growth. The term virtual digital assets has been officially adopted to include cryptocurrencies and non-fungible tokens. Additionally, for an exchange to operate legally, it must not only register with FIU India, but also maintain transaction records for a period of 5 years. The Integration into the Prevention of Money Laundering Act of 2002 classifies these exchanges as reporting entities, further tightening the regulatory framework. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.